Welcome back to the channel. Here's Trader Jan. This video is about reviewing the 18th of November and two accounts. One is the locations which we defined. How did they match reality? Did they actually help during trading? And reviewing some of the trades. So let's start with the locations. I have here my trading chart, which I want to use for that one. As we see, it started pretty good. Let me deactivate the trades on the chart for the moment. So it started quite well. This one here definitely hold. Then it went back. It somehow ended up here. I don't know what happened, but my locations actually they were not extremely precise here to predict the bottom. Then it went up. Okay, and then here somewhere in the middle of that range. There must be something. It went down here. It was support and then a resistance. So let me mark that area as well, and we can review what happened there later. Same actually, nearly the same for down here. We don't want to over-engineer it, but it would be great to see what actually happened there. So when market went down, went up again, and then it actually never really hit our goals except the end of the day here. So our locations were a little bit off, needless to say. So that's not good, can be improved. Now looking at the trades, here we see a moment, we see nothing because the trades are hidden. Now I activate them. So as you see, I've changed my trading approach in starting on the 18th of November. I do so-called micro-scalps. So in general, I changed away from the day trading to scalping. I figured it fits more my personality. So as you can see here, I had like really like 12 ticks. Usually I take 6 ticks profit, and I'm trade ranges. So like this one here, see that one. That one was actually not such a good trade. It went back like 23 ticks, and then up here. So here, this is the ideal trade for me. So we are in a range. It goes out, it goes back, and then suck. I just scalp within, what was that? 25 to 40, 15, 16 seconds. Just go out of that one. I got 6 ticks, or here, what is that? 7 ticks, $87. That's it. Easy peasy. So here you see, okay, market came up and then it went into the market and then it went down a little bit against me, 11 ticks. I have a fixed stop loss of 30 ticks and take profit of 6 ticks. Yes, negative chance risk ratio, but that's what I figured works well for me. So let's go and check some further trades which I did. Where were those? Here. I did exactly the same. Here went, the market was ranging, came back to the upper part here, and I speculated on getting down. Market came back up, up, down, yeah, okay, here. So as you see, I could have taken more. I could have taken even, if you think about day trading, maybe here, but I figured I'm gonna try it with micro-scalping, and so far I'm quite happy. So here, as you can see, I traded completely in the wrong direction. I traded probably when the market came down here, I assumed that the market gonna go up here, but after, when you see here those shadows here, those are actually, that's the volume of the day. That's from an indicator I programmed over the last weeks. It's my market map, similar like bookmap, but bookmap is about limit orders. I record here the actual volume, what has been traded. And my belief is liquidity is king. I want to know where liquidity is. I want to trade into the liquidity or within liquidity. I don't want to be liquidity. I want to trade within liquidity. So that's my basic concept. As you can see here, I actually double down on the trade here, and that should be 20 ticks. Okay, yeah. I averaged, I dollar cost averaged in that trade. So here I speculated, okay, this has been already rejected, so it might reject again, which market came down and which it actually did. I stepped in here again. I sweated a little bit when it went back again, but then finally it went up, and I had a result of 16 ticks with 2 contracts in that case. So because I added 1 contract here and so on. Okay. So then here we see lots of these micro scalps. Here, I don't know what hit me. That's not supposed to happen. The market goes down and I guess it was FOMO, and no, that's market goes then right back and then kind of ranges here. Here, my strategy would more be like, okay, it's ranging here, and more like after it went 1, 2, 3 times, then I'm gonna look for exhaustion here, and then I'm gonna trade short and 6 ticks, nothing more. So here I stayed in the trade. It went against me 14 ticks. My averaging level in the ES market is 25 to 20 to 25 ticks. So I would have had a new contract added here, but the market went into my direction, 6 ticks profit. Here, this is the ideal situation. Market exhausts here, collects here, and then goes down into the range. Okay, 6 ticks. Here, market goes down back again. Yeah, it only went to the half of the range. Here, only went to the half of the range. So this is what we see actually, right? So here at that point, the market went out of that range, went out, went back. So I went in, but then the market headed back up. And that's where I need to be really careful with myself to not jump out of that, but to let it run enough to leave it a breathing room. I would have had 30 tick stop loss, enough wiggle room to only half a minute, and then went back into the range. Okay, here at the bottom of the range, here the market came back into the range here, stop order here, and then 6 ticks done, and that's about 4 seconds, $75. So that's about that trade. Did I have anything else here? I believe not. I did a lot of here. I did a lot of here. So moment here of another profile. So we are realistic here in our assessment. Okay. So the market came here back, and then I guess I could have waited until the market goes actually out like here and then coming back. And then it would have been an easy ride up here. But in that case, I was a little bit too close to the POC. So be careful, be careful. That's not what I wanted to see. So important here to monitor the volume, to monitor how does the market actually behave in this area, outside that range, and here. And there will always be opportunities. Okay, I could have traded here, as I see here. I could have traded here. Tons, could have here, exhaustion in the market, exhaustion in the market, comes down in the market. So when does it actually end here? At some point here, I guess it could have been, yeah, latest here, where the market is building that one here up, that one up. Then that would be the time that range is being dissolved. And it actually happened. Okay, then I went back. But here, as you see, I could have had like jumped up and down and up and down, and even here when it comes back here. But if it builds this one here, that's an indicator. Now be careful. Already this one here, be careful. It's building up an area outside of the current zone. So if we show the whole session here, better show the whole session. So here we can see it got heated up here. It's nice up and down, up and down. And latest here, the lighter colors, they mean more the areas. The latest here, there was a change of volume. Here was a lot of volume already. That was actually, that's that's delta. That's colored for delta up here. So even though he, oh, that's a nice view here. That's the, oh yeah, there have been quite a lot of buy volume, but that one got absorbed and the market was pushed back. So here, I guess I could have done more. Look here, the range is about 44 ticks. Could have done more, but I wanted to focus on my beloved scalping. So, having said that, that's already a long video, and we have been at the 18th of December. So the overall result of the day is 285 ticks in plus. I did some trading on the NQ markets with 244 ticks. That's, sure, gives a lot of boost to the overall number. But nevertheless, overall 285 ticks plus for the 18th of November. On the demo account, I had 320 ticks plus. On the evaluation account, 58 ticks minus. And on the funded accounts, 23 ticks plus. That's it for the day. See you later.